Hello, today I'd like to talk about very important uh, tax law changes which will be take effect on January of 2026, and that is the Tax Cut Job Act of 2017, which was one of the major largest tax code changes in decades in US under the President Donald Trump's terms. So this Tax Cut Job Act is going to be expires December 31st of 2025, and there are a number of issues that it might be helpful to go over and visit them and make decision about the changes might affect to your taxes and your life. And I like to talk about a few items. For example, the highlights of the changes, which will be standard deductions. Before, we had personal exemptions before the effect of the Tax Cut Job Act of 2017. We had personal exemptions, like each qualified person will have $2,000, and then with the number of dependents, and that will be reduced. But under the Tax Cut Job Act, for example, for 2024, for a single person is about 14,600 standard deduction. For married filing joint is 29,200, and for a head of household is 21,900. So if this law affects in January 1st or revert the previous law, so we will go back to the personal exemptions of $2,000 per person or qualifying person. Another important thing is the changes in the margin of tax rate. Under the Tax Cut Job Act, we have the rates 10%, 12%, 22%, 24%, 32%, and 37% is the highest. But it will change in January 1st of 2026 to 10%, 15%, 28%, 33%, 35%, and 39.6%. Another item which very important under the Tax Cut Job Act, for itemized deductions. For itemized deductions, we had something they call it SALT, S-A-L-T, which is state and local income taxes and property taxes. Under the Tax Cut Job Act, this was limited to $10,000, including all the income tax, local tax, property tax. $10,000 married filing joint, but $5,000 married filing separate. If this law changes, then it will go back to pre-Tax Cut Job Act, which was unlimited, whatever you had for property tax, state income tax, and local income tax. And another item that under itemized deduction was changed under Tax Cut Job Act was miscellaneous items changed. Eliminated miscellaneous items. For example, unembarrassed employee business expense was eliminated, or some of the expenses you could deduct, like preparation tax or some other things, is gone under Tax Cut Job Act, or so many other itemized deductions. Now, after this January 1st of 2026, if no tax law changes, it will go back to pre-Tax Cut Job Act, and it will be deducted under the itemized deductions. And child tax credit under Tax Cut Job Act was $2,000 per qualifying child, and then it will be changing January 1st of 2026 to $1,000 for per qualifying child. The most important is the business provision for the deduction of QBI, Qualified Business Income, under Section 199A. What it means? It means that if you had if you were sole proprietor, you had business, or if you have Schedule E, you have some business, rental income and so forth, or you have a partnership, S corporation, estate, all of those, it will be passed through to income taxes. And then under this the provision, if you are qualified, then you will get 20%, up to 20% of the net income from your business. That was very good for small businesses. So reverting this tax law in January 1st of 2026, it will hurt a lot of small businesses, because this 20% is going to go up to 20% of deduction from their taxes. Under Tax Cut Job Act, not everybody could take this 20% QBI, Qualified Business Income. Those that they call SSTB, which who they are SSTB, those people that they are like in healthcare, law, like attorneys, accounting, investments, financial advice, management, or actuaries, they will be limited under their income for this 20% qualified business income. But otherwise, for others, they will be utilize it. Another, the most important item which will be making so much changes on so many people's tax situation is the lifetime exemptions of the estate and gift tax. For example, after Tax Cut Job Act, the lifetime for each person has a lifetime estate and gift tax exclusion or exemption. For 2024, the exemption for individual is about 13.61 million. For couple, married couple, will be 27.22 million. But 2025, which is the last year of the tax cut job provision, for person it will be, for individual it will be 14.16 million. For married couple, 28.32 million. If no changes happen, then it will be reverted to pre-Tax Cut Job Act, which it might be about 5.6 million per person and about 12.2 million per couples. But if they adjust it to inflation, it might be between 6 to 7 million per individual or per person, about 12.14 million for the couples. The most important is this: with increasing this or reducing this exemptions, annual exemptions for many individuals, and also for those high people that with their high estate and inheritance, that will increase the treasury tax income substantially. And another important subject we have to know is some states, they have their own inheritance and estate tax law, which other than the federal. But California in January 2005 has eliminated separate estate and inheritance tax law. So, but the resident of California, they have to file for federal, all the tax law that applies to them. And overall, I will say because of these changes that happening very soon, end of next year, it will be important for some people to make decision about this before expiration or sunset of this tax laws, make decision, affect your family and so forth, and have a good tax year. Shahra Tadayon. I hope that you enjoyed this presentation. Thank you.